Welcome back to another episode of SaaS Buyers Club. I'm your host, Omeed. I'm a corporate and M&A lawyer that helps SaaS founders with their contracts and negotiation. And essentially, I help SaaS founders scale and sell. That's what I love to do. So if you haven't listened to the show before, the mission of SaaS Buyers Club is to create as much value as possible for SaaS founders by connecting with thought leaders like Blake Hutchison, who I'm pleased to welcome to the show today, to drive value for the SaaS founders so that they can get the best exit possible. So with that being said, glad to welcome you here today, Blake.
Thank you, Omeed. Appreciate the opportunity. It's going to be a good, fun chat.
Absolutely. So you're the CEO of Flippa. How did you come to be the CEO of Flippa?
Yeah, I've been in the seat now for 6 years. I guess there's two real pathways here. First pathway was I have been a founder and entrepreneur in my own right. Ultimately, whilst built a decent business, it didn't quite work out. So I became familiar with the Flippa platform as a customer, first and foremost. I had built a marketplace and I exited that marketplace on the Flippa platform. First and foremost, had customer experience, and that obviously resonated with the board and the founders. The second part of that was, I've consistently worked for founders and helping them build and grow and scale companies. I've done that across SaaS businesses, e-commerce businesses, publishing businesses even. And so when the board came a knocking, they were looking for someone who could obviously empathize with the customer base. We represent assets of all types. And so that broad and diverse experience probably resonated with them and made me a good fit. Here I am 6 years later, and we're having a good time of it. And we're obviously super proud of all the entrepreneurs and investors that we represent on the platform.
Yeah. So for all the listeners who don't know what Flippa is, I would love to hear how you would describe what Flippa is.
So let's start really simple. It's a place to buy and sell businesses. That's the easiest way to think about it, first and foremost. And then there's obviously some nuances to that. So nuance number one would be that we do digital and online businesses only. Of course, SaaS being one of the monetization and or business models that we represent on the platform. The second nuance would be that it is a combination of a search engine and a matching engine, but it's also a brokerage and an advisory service. So it truly is a platform with an assisted service layer. And that's quite differentiated because clearly we were built first and foremost as a technology company. So we're really, really good at the matching layer. We're really, really good at the data integration layer. We're really, really good at the messaging layer, which is, the negotiation environment where two parties or multiple parties can come together and, of course, get deals done. But on top of that, we've added a network of brokers and M&A advisors all over the world. So we have a team in Amsterdam, a team in Austin, Texas, and a team here in Melbourne, Australia, providing that global coverage and making sure that people have the advisory and the capability they need around them to get those deals done. We represent subscale businesses, Omeed. So the biggest business sold on the platform was $35 million. So we will tend to represent businesses below that amount of money. So you're talking about, subscale. Most common businesses sold between $500,000 and $5 million.
Got it. That's going to be my next question. What's the average size of the transaction? You beat me to it. So that's cool. Very interesting. You're a marketplace primarily for digital businesses. The differentiator for Flippa is this technology that you've developed, which is this brokering and matching technology. Let's talk a little bit about that. How does that work and what goes into how that makes Flippa different?
As we all know, when someone sets out a pathway to exit, they think about how they can best access buyers. So where do you find buyers? Who knows them? Who has them, who can connect you with them. And then, of course, it's not about connecting with one, it's about driving some competitive tension. And so over the last 15 years, we're 15 years old this month. Over the last 15 years, we've obviously amassed a very large network community of investors and acquirers across different business models of different types, be it individuals like you or I, all the way through to institutional investors, private equity, family offices, and strategics who come onto the platform and look for bolt-ons. And so when you've got that big network, it's one thing to say you have lots of buyers. And that's what lots of people do, right? They'll say, hey, we are this broker, we are this marketplace, we have lots of buyers, aren't we great? That's cool. It's cooler when you can match them up at scale and efficiently. So we do 425,000 programmatic matches a week, and the 425,000 programmatic matches a week we do are a function of reading intent signals. So if Omeed has a profile on Flippa and you say you are looking for SaaS businesses of the following type, representing the following metrics, we know one thing about you. We know what your buy box is. We also know where you're based. We also probably know what your budget is because you've verified funds and given us some sense of the size back deal you want to do.
Mm-hmm.
So that's a good starting point. The next starting point is, when you go and look for a house to buy, what you actually start off looking for doesn't necessarily represent what you end up buying. So if you've ever been on Zillow, you start to move off that natural pathway and you start to look at other stuff. And so those intent signals are really, really important. So we programmatically feed those intent signals into your profile. And then as a function of that, we start to match you up to not only the stuff that you've explicitly said you're interested in, but that you've implicitly said that you're interested in. And so that then informs the graph neural network, which is a cluster. And that looks at buyers and the similarity of buyers to each other. And so once we figure out what Omeed wants, we can also get a lookalike read on other people like you and infer that they'll like similar stuff. We then do the same thing on the sell side where we cluster sellers together. And then, if Omeed looks at one thing, we can then say, well, Omeed, you might want to look at this thing too. And rather than you having to search the platform, we're going to programmatically do that. So we'll text message you, we'll email you, and we'll tell you about these new deals that have come on the platform. And so that makes for more efficient deal making because there's two things that really happen. One, a seller gets more interest. Two, sellers get more interest from relevant people. And then three, you can drive some competitive tension.
Do you have any stats as to accuracy of matching algorithm? Like how often does that actually contribute to a sale versus have you done split testing, for example, like with the matching algorithm and not with the matching algorithm and seen what the difference is?
Yes and no. So February 23 was when we launched it. And so there's a couple of things that we've been able to get a clear read on. The first thing we've been able to get on a clear read on is deal speed. And so deals are happening faster now as a function of more buyers seeing each asset. And so we've been able to get, it's not huge, but we've been able to get about a 15% decrease in the speed that it took to where we're at now, which is pretty good and is in the seller's interest because they get to collect their check faster. The second thing we've been able to obviously measure is the number of buyers interested in any given asset. And so it's not actually that the AI ends up finding a buyer and that buyer is better than someone who actively searched the site, but you do end up having more buyers competing for. And as a function of that, we've seen more LOIs hit. And so LOIs are clearly a leading indicator for deal making. And so LOIs are up, deal making is up. And as a function of that, we've done around 18% more deals in the trailing 12.
Got it. What's the breakdown of businesses on the platform? Like how many SaaS businesses, how many e-com, that sort of thing? Do you have some stats there?
So e-com is dominant. That's just a law of large numbers thing. There's just a lot of e-commerce businesses in the world. And so e-com is absolutely dominant. And then you'll have a very, very good mix of SaaS, online publishing, iOS and Android apps. And we are starting to crowd the marketplace as we move into new categories. So we've just launched YouTube channels. We've launched newsletters. We're about to launch digital agencies. So I would say off the top of my head, the SaaS mix is probably 10%, maybe up to 15% of marketplace coverage.
Got it. Okay, let's say I'm a seller. I'm ready to sell and I could go to broker, I could go to Flippa. Walk me through the thought process there.
Yep. So I think there's a couple of things. First and foremost, we have accredited advisors who are certified M&A experts, well-credentialed, history of deal making, and we have them in each of our offices. As to whether you would go with a broker or Flippa, you're going with a broker and Flippa. That's a really important point. Second thing is, well, let's assume that those brokers are good and they are highly credentialed deal-making experts, have a history of doing deals, ex-Goldman Sachs, ex-KPMG, ex-aggregators. They've got very, very substantial experience in this particular space. Let's assume that I've now made that decision. You're getting a couple of things that you wouldn't otherwise get. The first thing you're getting is obviously access to the world's largest pool of buyers, and that counts for a lot. The second thing you're getting is it is end-to-end. So we're the only platform and or company in subscale M&A in the world with reps and warranties insurance on both the sell side and buy side.
Hmm.
We're the only company in the world with integrations to 15 different platform economy companies, enabling you to seamlessly connect your data and have that data exposed to preferred buyers so they can make informed decisions faster. And so we'll connect you to Stripe, connect you to PayPal, we'll connect you to Amazon if you're an e-commerce seller, Xero, QuickBooks Online. And that level of data transparency is extraordinarily helpful for you when listing because it's quicker, and it's extraordinarily helpful to the buyers because they can more efficiently understand the veracity of the asset. We are the only platform in the world that has not only an in-house due diligence service for the buyers, but on top of that have integrated LOIs, asset purchase and share purchase agreements underpinned by Dropbox sign. So when you combine all of this, the combination of the Zillow-like search experience for subscale M&A activity and the end-to-end service layer, it's kind of unparalleled. And then finally, Omeed, it's cheaper. So, I'm very biased, obviously, but if you're looking to exit your company, do so with great level of service at the best price. Seems like the right way to go.
Mm. Can you speak a little more to the cheaper part? Like what kind of data can you share there? What kind of information?
Yeah, of course. So it is a success fee business model. So we will make our money when you successfully exit your company. It is free for buyers and acquirers and investors. Now that success fee model is variable. It is as low as 3%, but we're talking about $10 million plus deals. And it can go as high as 10%, but we're talking about $100,000 deals. And so check out flippa.com/pricing and you'll get a sense of that pricing layer. But, for a deal that is $1 million, you're going to pay 6%. And that's certainly a lot lower than a broker.
Got it. Cool. Yeah, I'll include that link in the show notes as well, so people will be able to access it. That's awesome. Is there anything else that people need to know about Flippa? I think we have established, a good ground and foundation for the conversation.
Yeah, I think so. I mean, just treat it as a platform where it's free to search and browse, and that's a good way to start.
Cool. You've been in this seat for 6 years, and at the helm of this marketplace. Talk to me a little bit about some trends that you're seeing now, as well as the progression of trends over the course of history during your time at Flippa.
Yeah, so obviously we're still dealing in a nascent industry. So subscale online business M&A is still relatively unfamiliar to most people. And so we would expect that over the next 5 years and into the next decade, there'll be a greater awareness and appreciation for online business entrepreneurs that aren't unicorns like startups. And we expect that there'll be more people looking at this asset class as a genuine asset class and compare it to stocks, bonds, and other things that you could buy, which give you an annualized return. So we think that the industry will obviously continue to grow. If you talk about more immediate trends, clearly, much like any asset class, we are influenced by the macroeconomics. And so where there's interest rate pressure and inflationary pressure, investor sentiment will tend to fluctuate and wane. And where there is widespread media attention given to tech startup valuations and or lack of capital, people will default to thinking that's a proxy for subscale M&A and therefore will be reticent to list. So I would say that right now there is a bit of a stalemate going on, and clearly we're seeing more deals than ever before, but that's kind of through brute force sales and marketing effort. The reality is, yes, there is some sentiment in the market that one, maybe today isn't the right time to list, and two, maybe today isn't the right time to acquire. The interesting thing is it's probably not correct. And the reason being is you're actually dealing with a really immature, undervalued asset class. So in the days of 50 times, 100 times sort of venture valuations and or public market SaaS businesses and or tech businesses being valued at 40 times and 50 times ARR, those are businesses which are, one, either looking at substantial opportunity in the future in the form of VC, or two, are operating in a public market environment where there's mass liquidity. Now, in this particular case, this size of deal, sub $10 million, I mean, frankly, it's been disrespected. It's been undervalued for for a long time. So it's not like if your multiples were averaging 4 that you can get a lot of depression there. And so we haven't seen a lot of depression. But the problem is, people read the media and they equate their $1 million ARR business to a $100 million ARR business. And so that's very common, and we have to continue to educate founders and entrepreneurs as to what the subscale M&A market actually looks like and the multiples that we see and derive, and you and I can talk about that. As it relates to kind of the 6-year journey, clearly we've seen values increase. So as more entrepreneurs have matured their businesses, so too has Flippa seen average deal values increase. Obviously, through COVID, you saw a huge number of new business starts. We didn't see any change to our business through COVID because the average business that sells on Flippa is 4.5 years old. And so clearly all of the growth in entrepreneurship as a kind of occupation, we will start to see the benefits of, as will the investors and acquirers in our platform over, this year and into the next few years. I think in that context, we can talk a little bit about, what an acquirer looks for in a SaaS business on Flippa. And then we can talk about some of the multiples we're seeing today, if that's helpful.
Absolutely. Yeah. And okay, real quick question that I'm going to fire at you. Codie Sanchez's and the Roland Frasers and, those various different people, helpful to the market or hurtful?
So I'm going to say helpful, right? Because clearly there is a world of people who would have historically not contemplated buying a business or not contemplated starting a business if it wasn't for all of these influencers and ambassadors talking about the space. So helpful in the sense that at a macro level, we want more people thinking about wealth creation through alternative means and approaches. Now, in some cases, there has been a crowding of the market in an unhelpful manner. So no money down deals are not in the interests of the seller. And so that type of rhetoric is unhelpful in a platform context because you get people trying to sling those deals. And that is, one, not in Flippa's interest, but certainly not in the entrepreneur's interest to take a deal of that type. And so it is a balance, Omeed, between helping people understand the opportunities in wealth creation through asset ownership and 2, mature deal-making practices.
Agreed. I can't tell you the number of people that came to my firm like during the heyday of that movement and were like, oh yeah, this person influencer told me I don't have to pay my lawyer. I could get my lawyer to do it on a success fee. I could get my accountant to do it on a success fee. We're trying to get no money down deals. I saw this guy do it, so you should do it. Had so many of those conversations. And then I also heard that Codie Sanchez was pretty much like single-handedly responsible for saturating the laundromat and car wash market as well. So
yeah, credit where credit's due. We absolutely are doing deals. And in fact, at any given time, I'm representing one deal on our platform just so that I can get my hands dirty and understand how the platform works and how it works in the interests of obviously us as an organization, but also buyers and sellers. And I can tell you right now that we are closing on, it's a small deal. It's a $600,000 deal, but this is a high net worth. He's historically owned brick and mortar businesses, offline businesses. He did find out about Flippa through Codie Sanchez, and he was inspired to consider digital as an alternative approach to his investment portfolio through her videos. And so if the right individual comes along who has been inspired to invest in online businesses and use Flippa as a result, then clearly I'm going to be an advocate for her.
Yeah, it kind of seems like the subscale market, was it the influencers that drove the subscale market? Was it just investors looking for undervalued assets and, the market just being driven down, from more people trying to access the market, essentially just investors looking for, new markets to capitalize? It's quite an interesting question.
Isn't it? All of the above. So one, you obviously had this groundswell of attention given toward FBA, say 3 years ago. And so oh my God, so I can buy a fulfilled by Amazon business that has got some traction and that looks interesting. So I don't have to start it. I can learn from what somebody else has done. And instead of going 0 to 1, I can go 1 to 10. Hey, that's cool. I didn't know about that. That's in the press because Thrasio is the fastest unicorn in history. So the media will jump on a fad and
Pour gasoline.
the general population will consume that content. And as a function of that, you have a flurry of people interested in FBA. I think, and then you'll have institutional investors, right, who will start to think, well, if Facebook's more expensive than ever before and more competitive than ever before, if Google's the same, if customer acquisition, if my CAC cost continues to go up, what are the inorganic ways in which I can grow? And so growth through acquisition is very commonplace. But if I own a network of athletic stores across the US and I have no way of expanding my footprint, then maybe I can buy a media asset that orientates to that same community. And so I think it's just a number of different trends, probably the biggest of which is just the fact that there's more digital assets today than there was 5 years and 10 years ago.
Yeah. So let's talk valuation trends and shift to valuation trends in the online business market. What are you seeing let's start there. What are you seeing?
Yeah. So the good news is, for everyone out there, I hope you don't mind the blatant plug, but you can just literally click on the data insights tab on flippa.com. So flippa.com/data insights. And you'll see that there's a very, very transparent view of this world by business model, by asset size. The reality is we saw a really, really good comeback in half one. And so that was a function of more deals being done, but it was also a function of perhaps a little bit more investor and consumer confidence in the market that we live in today, albeit a high interest rate environment. At least I understand it now. And of course, there is some sentiment that the Fed will reduce rates and perhaps that gives people some confidence to re-enter. And so valuations did come back a little bit. Our top decile was just over 5.5 times. So, and I'm talking about SaaS. And so that's 5.5 times net profit, or SDE, seller discretionary earnings. So that's obviously revenue minus cost plus add backs. And as a function of that, we're really excited for this new generation of SaaS acquirers that have come into our marketplace. And we're really encouraging of SaaS founders right now to list privately on the marketplace and test the market. So that's an opportunity they have. I think probably the other thing that's happening right now, there is a lot of investors looking. And so you can play them off against each other. And so every day a new, subscale M&A roll-up or aggregator shows its hand and says, we're here to buy assets and sit on assets forever and hold them forever, Warren Buffett style. We're going to do that for subscale SaaS businesses. We're going to do that for subscale e-com businesses. And so there's just so much activity right now in the platform that I do think that it's a really good time to play investors off against each other if you're a good quality seller. Quality is the only thing that matters.
Yeah, key.
So if you're running a SaaS business with a churn rate in excess of 25%, you're not going to sell, as a SaaS business at least. If you're not growing, 5% minimum, preferably 25 and 30% in this particular space of the market, then again, it's going to be difficult. If you've got a very, very low LTV and a very, very high churn rate, well, clearly it's going to be difficult. And so it's not just because you're a SaaS business that you can command a premium. You have to be a SaaS business which has good ARR growth, low churn rates, preferably sub 4% monthly. And you have to be growing. Now, you don't have to be rocket ship growth. That's not what people are looking for in a platform like Flippa. But 5, 10, up to 30% growth annualized is obviously looked upon very, very favorably, and you'll find that you can command a premium. Certain markets, obviously, there's so much attention right now given to AI startups, but that's not the same on the Flippa platform. People on the Flippa platform yet. People on the Flippa platform are more mature investors. They're looking to pay you for prior performance, not pay you for future opportunity. And that is a really, really interesting thing that people need to get their head around. Yet, you are absolutely right. So we've started to see, and you can see this in the data insights layer that I alluded to before. You can look at search intent and you can sort that by 7 days, 30 days, 6 months, and also 12 months. And it's quite funny if you click through all of those and watch search intent on Flippa, AI is moving up very slowly. It's not in the top 10 yet, but it's probably not that far off.
Everyone talks about like AI being a bubble and how we're going to see a bloodbath of AI businesses and how, all of these AI businesses that are launching at some point, just as most of these markets do when they're experiencing such explosive growth, like we are going to see a period of time maybe when the founder gets burnt out, isn't able to continue to grow the company the way that they were hoping to. For example, what's the stat? Like 90% of businesses, never make past XYZ year. So they're going to all go somewhere.
And the stats won't change. And in fact, I'll try and find it right now. But Sieva Kaczynski, who runs Enduring Ventures, he did have a post on his LinkedIn which talked about the average size of businesses in the US. And, the reality is just because you're an AI founder, the mix will still be the same. There'll be very few businesses which derive greater than $10 million in revenue, far fewer of those that derive $100 or $1 billion. And most of them will be subscale, sub $10 million. They didn't necessarily intend to be that way, but that will be the reality. And then you'll see this huge groundswell of businesses available for sale, and acquirers will love that because they'll take a 0 to 1 effort, IP, they'll take all of the technology investment, they'll take the existing customer base and they'll operate it in a more efficient manner and treat it like a PE acquisition and do really well through the AI craze as a function of all of that entrepreneurial spirit that's in the marketplace right now.
Yeah. And also to the prior point that you had made about that, for example, like a business with a very high churn rate. I mean, sometimes there are also diamonds in the rough, like with those businesses as well, in terms of like maybe the founder like isn't really a marketer, maybe isn't like a great, business operator, and they haven't implemented, like a retention to counteract, the churn, for example. So I've definitely heard of people buying businesses and they just like one thing, for example, and that results in success for the business. Would you say that's accurate? That is a possibility. Have you seen that to an extent? I know you said that for the most part, businesses that have really high churn usually don't sell on the platform, but what are your thoughts on that?
So I love that use case. I think it works really, really well where you've got a subject matter expert who is hunting and sniffing out exactly what you have just alluded to. So they're looking for business owners who have been really good at a few things, but are less good at where they have strong specialization. And so if you can build tech, that's a differentiator, but often you don't understand the sales and marketing aspect of running that business. And so maybe you're really good at building a funnel, but maybe you're really poor at lifecycle marketing. And therefore your ability to capitalize on the extent of your funnel is diminished. So you can get a good sales or marketing operator who looks at that business and says, what a piece of cake. They're really good at this. They're really good at that. They're really bad at this. And I will take that over. I will gut the things that they're doing poorly. I will retain the things that they're doing really well. And I will now capitalize on the opportunity. Yeah, that's common. I think it mostly works where the business model is underutilized. And so someone will look at a business where they're underpricing. So maybe they're charging whatever, $5 a month, when if you were to really test elasticity, maybe you can charge $15 a month. And so there's immediate opportunity there. Now, often they're charging $5 a month because they're trying to win as much of the market as they can. Whereas the acquirer, who is looking at these businesses for the purposes of deriving profit and a return on their investment, they think about them differently. So they don't have a problem with 3 timesing the price of the product, so long as they believe retention will remain mostly stable. We've seen cases as well where the business model is fundamentally wrong. So people will have a one-time use fee when in fact they should actually have a monthly fee to access the product. So you see this all the time actually, where most of it comes down to a founder or an entrepreneur having a blind spot.
Yeah. And I would imagine that there's probably opportunity for SaaS founders as well. As you mentioned, as CAC costs increase, for example, there's a great opportunity for potential SaaS founder to come on the Flippa platform, potentially find like a newsletter that squarely speaks to their ICP, or a YouTube channel, for example. These are creative avenues for, just the same way, to playing with kind of these different business stats and finding the diamond in the rough. It might take some effort, but at the same time, there's opportunity on this platform, I would imagine.
Well, yeah, I mean, we've all seen those LinkedIn posts, TikTok posts, whatever posts, where someone makes it sound really easy to build content layer and acquire a community in the tens of thousands, hundreds of thousands of millions. It all sounds really easy, right? Now, if I'm a SaaS founder who builds great tech and sells enterprise grade human resources software, maybe building a media entity isn't part of my DNA. But to go and acquire, as you said, a newsletter, a blog, a YouTube channel within that space, the cost of that acquisition will be far lower than trying to create that content and amass that community over the next 5 years.
So you said that the average multiple for businesses on the platform is about 5x net profit. Is that right?
Yep.
And you said that most of the businesses, remind me of the average sale price. You said 1 to 5 million is the average purchase price.
Yeah, more like, it's obviously a big range, but more like $500,000 to $5 million would be the sweet spot.
Gotcha. Okay. And is that specific for SaaS, or is that just the aggregate of all businesses on the platform?
That's specific for SaaS, because most of the SaaS businesses we see have matured to some extent where they are commanding that price. Whereas, a blog or a newsletter or a YouTube channel, sometimes they're a lot smaller than that. Yeah, I mean, if the question is orientating to, what is the price that you have to buy in at to get something of value? You can buy, we see this all the time. I mean, you can buy a newsletter or a blog for $50,000. It's turning over, its profits, $15,000 to $20,000. You'll pay $50,000 for that asset. Not only have you got a new revenue stream should you want it, but you now also have a media asset that you can capitalize on for the purpose of winning net new customers.
Interesting. Yeah. I love that. Continuing the conversation around valuation trends, what else can you tell me about, valuation trends that you're seeing with respect to the SaaS market?
I would say, a couple of things just off the top of my head. Clearly, most of what we see today is B2C SaaS. And I think that B2B SaaS, when we see them, and they're few and far between because they're still kind of scale up mode, I think that you do get a premium for B2B SaaS. And so where we see them on the platform, we notice that they tend to trade at higher multiples than B2C SaaS. So that was kind of one thing I would observe. Probably the
like a 6 to 7 versus a 5.
Yeah, I'd be saying that anecdotally and off the top of my head, but yeah, premium of 1 to 2 times. I can imagine. Yes, we're also seeing cross-border deal making. So 67% of the deals done on Flippa are in fact cross-border. And so one of the things that we've seen trend-wise is that people will treat acquisition as a market expansion strategy. And so if you have a SaaS business that is going after a certain segment, let's say for argument's sake, tradespeople or builders, and you're going after tradespeople or builders maybe in Asia, and you've got a US-based SaaS business that goes after tradespeople or builders in North America, then you will tend to find that the acquirers who are interested in you are actually interested in you for market expansion purposes. So it's quite compelling for acquirers to seek out new assets elsewhere, and it's also compelling for those people seeking out an exit to think about the buyers and the geographies where those buyers may come from when thinking about how they position their business for exit. And is that a trend? Yes, it's a trend in the sense that we are absolutely seeing more North American businesses, more Asian businesses think about acquisition as a market expansion strategy.
What's the biggest SaaS deal that's been done on the platform? If you don't have that data, that's okay too.
Trailing 12, it was $8.5 million.
And it sold for, you said the biggest deal was 35. What was that deal?
So the $35 million deal that we sold was a iOS and Android app portfolio. Now, admittedly, the apps within the portfolio were SaaS businesses, but the way Flippa treats them is an iOS and Android app portfolio. Now, that portfolio sold for 6.5 times net profit, and that was a portfolio of 30 different apps. The seller was based in Singapore. The acquirer was based in Boston. The acquirer is an app aggregator, and that was bought because they had a stranglehold on small business design. So designing logos, templates, website designs, these types of things in an app environment on a SaaS business model, going after small business owners. Now, Live Worksheets, which was the $8.5 million deal, was a teachers platform. So it was an educational platform, 2 million registered teachers, and the teachers would basically buy access to teaching material.
And what was the multiple on that one again?
Bringing it up right now, 5.8 times revenue, 5.8 times ARR.
So like $1.5 million in ARR, because it sold for at 5x multiple, right? So
yeah, you're bang on. So that was $1.4 million in annual revenue.
Cool. I love it. What do SaaS founders need to know about selling on your platform? How can SaaS founders be most successful in selling on your platform?
So selling on Flippa platform or selling in general, the metrics matter. You need to understand those. So we find that buyers are really good at tripping sellers up, and we don't like that, but it is a reality of the maturity of a buyer versus the maturity of a seller. So you need to know the metrics that govern your business, and often we find entrepreneurs don't know these as well as they should. So let's just go through those. I mean, clearly you need to understand what your MRR or ARR growth rate is, but let's assume that that's the basics, and you should know that. You absolutely need to know what your monthly churn rate is and what your annual churn rate is. You absolutely need to know what your net retention rate is. You absolutely need to know what your LTV is. Absolutely need to know which funnels work for you and which demand generation channels have driven your customer acquisition and how much it has costed you to acquire the customer. You must know these things. Buyers, what people forget is they say, well, where did that buyer go? They asked me a few questions. I took a bit of time to respond, but now I've got the material. The buyer's off doing another deal. So buyers have choice. And sellers obviously get excited by the opportunity of that first ever check. And so you want to have that information at your disposal prior to getting started. We often have a lot of people who say, can I get started on your platform? And then I'll start to, I'll bring together the material through the selling process. No. You got to get the material together immediately prior to selling so that it's sitting there at your disposal.
Oftentimes we see this as lawyers too. People come to us and, we're waiting for last 3 years financials, for example. We're waiting for tax returns, that sort of thing. That's why I've been waving the flag of this new vision that I have, which is, sellers actually being proactive, thinking ahead about selling their businesses, starting to organize their data rooms, working with advisors well in advance of the transaction, to get those things together. So, but what I hear you saying is that they need to have those metrics together already before they come on the platform. Is that right?
I mean, things like tax returns and things like that, we can obviously pull that together in the data room through the selling process. Yes, but you don't want to go live. So it is actually like selling a house, and that's more familiar to most people. If you don't know how many rooms are in the house, you can't sell the house. If you don't know how many customers you have, you can't sell the business. If you don't know how many customers you can retain, you can't sell the business. And so these elements are absolutely critical in capitalizing on buyer attention when buyer attention is available. And that is important because it's not like a buyer doesn't have other things to do. They have money to spend. They're probably running a business or multiple others. And they're looking to have at their fingertips the material they need to make an informed decision fast. We all know this phrase, but time kills all deals. It is very true. It is very real. If you take 48 hours to get back to a buyer, when in fact they expect you to have the answers at your disposal, then you're going to miss an opportunity and they're going to get a deal done elsewhere. Financials, you have to have your financials in order. You should be using cloud accounting software anyway, so it should be pretty easy to come by. Jump into QBO, jump into Xero, and have those P&Ls ready to go. Your expenses should all be reconciled. They should all be categorized accordingly. And so you should be able to then say to a buyer, these are the areas of the business where we've absorbed costs where we don't think we necessarily need to absorb it in the future. And these are the areas where we derive revenue, where we think we can derive additional revenue. And you should be able to point to metrics and or experiments where you can prove that out. Because what they want to know is that they're buying something where the performance is validated, but the opportunity is understood.
Are there advisors on the platform that can help them put those metrics together? Okay.
Yes. When you list on Flippa, you have the choice to self-service or be brokered. The price is the same. so do not
no-brainer
choose service when you can have.
Why would they?
Accredited advisors who are experienced deal makers. Some people don't like being brokered because they think that they're either going to be pushed into a corner to do a deal. We can't do that. You do whatever deal you want to do. So our brokers are there to operate as a conduit between yourself and a buyer. They're there to help you understand the metrics that matter, that what buyers are looking for, and they're also there to help you to understand negotiation structures, because buyers are clever. They're going to throw all sorts of things at you. They're going to say, is this deal available for seller finance? And you're going to say, what is seller finance? They're going to say, are you willing to do an earnout and have equity in lieu of cash for that earnout? And you need to understand what they're talking about. They're going to talk about the fact that they may require SBA financing to do the deal. And you might say, well, what's SBA financing? So brokers are obviously aware of
all these little tricks,
the art of doing a deal, and they're there to help represent you.
Yeah. If you were to advise sellers about buyers that approach them with these, various deal-making tactics, how would you advise them?
I always say, please just put forward an offer so I can consume it. You do get some sellers who try to architect and orchestrate an offer in their head prior to receiving one. And my recommendation is you get right of refusal. And at that point, you can negotiate and put forward whatever you think is the right approach and offer. But your job right now is simply to pitch your business to the best of your ability to solicit the offer. And so we would always encourage people to, instead of saying, well, the minimum I would accept is X, or the deal structure in my mind is Y, simply to focus on, do you like what you see? What else do you need to see to give you the information you need to make an informed decision? Have you made an informed decision? Yes, we have. Great. When do I expect your first offer? And then hold them accountable to a deadline so that you can either work with alternative offers and or alternative parties, or whether you're going to wait for this one.
I love it. Start to round out this conversation. So how has deal making looked in 2024 so far? And what's your prediction for the second half of the year?
Okay, so I can obviously only talk about the Flippa platform, but clearly the macroeconomics have some effect on us and everyone else. We've done more deals. So we're actually seeing more deals. Now, is that a function of better sales and marketing, or is that a function of the macroeconomics and some positive investor sentiment creeping in? I think it's probably a combination of both. I mean, we're certainly hearing from investors that they've got dry powder, that they'd like to do deals. We've just published a new buyer directory where buyers can make themselves known to the community. And so we are seeing buyers respond incredibly favorably to that and say, hey, how do I get on this directory so I can get directly pitched by these buyers? So that's these sellers, I should say. So the fact that buyers are crying out for deal flow again gives me, I guess, positive sentiment around half two dynamics. I don't think you're suddenly going to see multiples move dramatically up and to the right. I think this is status quo right now. We are talking about I think when Sequoia issued their note back in September 2022, and they said 24 months. It's at least another 24 months before you see the end of a bear market and maybe the re-entry of a bull. But even then, not to the extent that we had seen in the past. So I think that buyers are willing to do deals right now, but they're only willing to do deals with reasonable individuals. And so what I think you'll find is that you'll get a lot of attention, but you will probably be more likely to see a deal structure which gives you less upfront and limits risk for the acquirer. And that's different to what we were seeing 2 years ago, where acquirers were all in. You could literally walk away in 30 days. But, I'm really bullish on half two. We've built our own forecasting model, and the forecasting model is obviously a function of looking at half one, Q4 of prior year, and leading indicators are good.
Talk about that a little more in terms of what are some of the leading indicators that look promising for the second half of the year?
Okay, so we're a marketplace, and this gives you some sense of the metrics that matter to a marketplace. And so we look at obviously listings. So that gives us a confidence level around how many people are actually willing to sell right now. We look at buyer inquiries. So how many actual inquiries happen on a weekly, monthly, and quarterly basis. And that gives you some sense that the marketplace is rich enough to satisfy the supply. We then look at LOIs. So LOIs are clearly a leading indicator for APAs and SPAs. And so if we're seeing more LOIs on the platform, that means that obviously we're likely to see more deals happen. We then look at terms. So we then look at, for every LOI, the terms, are we seeing more earnouts than ever before? The other thing we look at is what is the difference between the LOI price and the listed price? And this is actually a really interesting one, by the way. So the average difference is 18%. So when you list, you sell 18% lower than that.
Mm-hmm.
So that's a really important one. So we kind of look at discounting. Are sellers having to discount from their ask? And how has that shifted over time? And then we obviously look at APAs and we look at cash in escrow. These are all leading indicators for us to give us a sense for, is deal making going to be up or is deal making going to be down? And at the moment, LOIs are absolutely a record for Flippa. We've never seen so many LOIs on the platform.
Wow. How many?
We actually had a record number of registrations last week. So we had 3,259 net new users last week. LOIs. Okay, there is currently above $100,000. There's currently 67 new LOIs last week. That was a record.
Talk to me a little bit about, is Flippa the platform for B2B SaaS businesses? Like, what do you think contributes to the fact that B2B SaaS businesses maybe haven't been as prevalent as B2C SaaS businesses on Flippa?
One, I think that B2B SaaS businesses will tend to take a little bit longer to scale. Once you get them to scale, they tend to be a little bit easier to maintain. They tend to have a lower churn rate and they tend to have a higher LTV. They also often venture-backed. And so the life cycle of them tends to be a little bit longer. And so I would say it's probably just a function of the macro, more so Flippa, that we're kind of biding our time and waiting for all of the mature B2B SaaS businesses to find or to want to find that pathway to exit.
And so what would you say to B2B SaaS founders about how Flippa is for them?
Well, the first thing I would say is, again, it comes down to who your potential acquirer is. And so if you're looking to be matched to institutional acquirers, family offices, PE, family office, and or strategic, then we've got the largest community of PE, strategic buyers, institutional buyers. And so we know what these buyers are looking for and the industries that they're looking for businesses within. And so if you are in the market to exit and you're a B2B SaaS company, then it's a function of saying, well, how do I get access to the buyers? And so we would always argue that we can match you up to those buyers in the most efficient manner. And as a function of that, you're most likely to get a deal done.
That's where the buyers are or where the deals get done. So
yeah, whomever controls the demand tend to win the supply. And so we control the demand. You're talking about sort of minimum 10 and up to 17,000 net new buyers hitting the Flippa platform each month. And then as I alluded to at the top of the conversation, just in excess of 400,000 matches a week. So the scale at which we can connect you with a relevant acquirer stands out.
Well, Blake, this has been a really insightful conversation. Appreciate you joining me on the show for today, and all the listeners out there. His contact information, the Flippa website, all that, that's relevant. A lot of the links that were mentioned on the call today will be included in the show notes below. So you'll be able to access, the data and so on and so forth, as well as the Flippa website. Yeah, thanks for joining me this week. For all the listeners out there as well, make sure to follow, subscribe, like, comment, share. Let me know who you'd like to see on the show as a guest moving forward. Tell me what your takeaways from the show are. And as always, see you next week.